Fermi IPO yesterday?
No, I don't even know what that company is.
Yeah, no. I mean, Perplexity served this up to me. I didn't even see it on like other finance pages. So Fermi is yesterday's news. I got to check what it's doing today.
How do you spell it?
Fermi.
F-E. Okay.
I thought it was a clothing brand. I'm like, Fermi. Okay, yeah, like Fenty. Fenty Beauty, right? Fermi. Okay,
And
Fermi
they
shares.
spell their own company right.
Fermi
Fermi?
shares surged 55% in their NASDAQ debut Wednesday, closing at $30 a share after the energy-focused real estate investment trust, what can go wrong, raised $682 million in its IPO, a dramatic first-day performance for the Amarillo, Texas-based company, now worth $20 billion with probably no revenue, but I'll get there. Okay, so this company plans to build what it calls the world's first private owner power grid through its flagship project Matador, designed to generate 1.1 gigawatts of power by 2026. That's right around the corner. And potentially scale to 11 gigawatts. The energy campus will integrate nuclear, natural gas, solar, and battery storage on over 5,000 acres leased from Texas Tech University. Huh.
So a privately held non-public utility, that's what you said, right? They're going to provide power to, I'm assuming, just data centers?
Yeah. It's
Okay.
yeah. I mean, so it leases the land, and then it's going to provide power, and it's going to be a REIT. Oh, this is the best part. It's signed 20-year leases. Fermi does not expect revenue from tenants until 2027. Company reported a net loss of a mere $6.4 million. This is an idea. What is that, the legal cost to go IPO? Analysts warn that execution will be critical. No shit. Okay.
Well, again, there's a big reason why, again, other than monopoly power, setting up a grid and power generation is not profitable. That's why it's generally like a government-run type of entity. Does that make sense? Like, imagine building a nuclear power plant and the break-even is like 30 years out. What company is going to do that?
So I think maybe what this is I gotta look at the stock today. Fermi. Maybe what the play is here. I mean, it's leased land, so I guess the play is that. Yeah, why is it worth so much? I mean, it's okay. It's going to have some revenue, but maybe the play is that they can ultimately sell these things. It's up another 5% today. Let's go. 17 billion. Okay, yeah. Okay, a little bumpy. Weird.
OpenAI just closed a $500 billion valuation too.
I know.
That's been in the works for a few weeks. So
yeah, that hit the news yesterday.
Do they even go public at this point? Because it seems like the private pool is growing. Like it's
Why
being
bother?
So plentiful, right? Easy to access.
Why bother? This is, I mean, look, Trump was in the news, right? He's like, what if we go to biannual or semi-annual quarterly reports? What am I talking about? Semi-annual reporting. So like, we report quarterly, right? Quarterly earnings. What if we go to semi-annual? And it's like, okay, interesting. I think what the angle is there is trying to make it easier to be a public company. Because like we've all seen the data on the number of public companies has declined. Well, I don't know if we've all seen that. You and I have seen that, right? It's like down, I don't know, 80%, 90% in the last number of years, like 25 years. Like 25 years ago, there was 5x public companies, and now they've all been consolidated into massive companies, and also the private space is huge, bigger than it was. EA, Electronic Arts.
Yeah, they're going private, yeah.
Exactly.
You and I talked about how ridiculous that a company is expected to fundamentally change over 3 months, right? That's just what doesn't happen. And it gives very little wiggle room for that evolution to happen. And you're always saying, hey, we're sales up or down over the next year in 3-month increments. It makes no long-term sense. I think traders are going to be upset about the shift to semi-annual if it happens, right? I know the SEC is most likely going to push this through, but I know everyone's talking about, well, companies are going to cheat on their books. I'm like, well, that's not really the case anymore. Like, we're not in the 1930s.
I
right?
don't. Yeah,
1920s.
well, yeah. And first of all, I don't think it's gonna. I don't think it's gonna pass. I don't think it's gonna go anywhere. But I think it was just one of those backhanded comments that
Yeah,
it
just throwing
made.
something to the wall and see if it sticks, right?
Yeah. And then it circles the internet, and here we are now talking about it on a podcast. Look, it worked.
Yeah.
How about that?
Yeah.
Jeez. Well, Fermi. This is okay. So this is interesting. I think this company is not worth anything. I mean, so okay, they develop the play is obviously the nuclear thing. I mean, what can they sell the technology or something? I mean, I guess we'll just have to watch this one.
Yeah, unless they have some access to some power plant that isn't publicly owned.
Hold on.
I don't think
Back
that
it
happened.
up. The company was founded January 10th of 2025.
And it's already IPO'd.
They IPO'd and they're worth 20 billion. How we're in the wrong business.
Yeah.
We have got to come up with an idea, and by next March we can IPO at 20 billion.
A $20 billion company. Again, that leads into the question that we've been getting a lot, right? Like are we in a bubble? And this
So there was
SPAC-like behavior, right, is coming back.
Man, this is crazy.
I didn't know they formed a... Did they incorporate in 2025? Where it doesn't make sense still. Because you said they established as a company in January this year.
January 10th. They have a loss of... That's unbelievable. That loss is like basically putting together their business plan, 6.4 million since January inception through June. Yeah, oh my God.
I wonder if that was an AI-generated business plan. So needless to say, probably should not jump into this IPO.
All right, that's interesting.
Do you know if it was SPAC?
Yeah.
I can't find any information.
No, it wasn't SPAC because it IPO'd.
Okay.
But at 21, and it actually says IPO. It didn't say through reverse merger.
Run by Rick Perry, former
who's Rick
governor
Perry?
of Texas. Yeah.
There you go. Yeah.
I think we're going to see a lot more of this. It's like
I think we're gonna.
the SPAC craze is coming back.
Yeah,
At least
cash out.
Yeah. Or just
And
ignore
that's
it. Like I probably wouldn't even
That's
pay any attention to this.
that's what the advice has to be. It's such a challenge, right? Like it's easy to be on both sides of this, which is like you're selling crap to investors. Like why are you going public? Well, if you're an advisor to the company, on the other side of that, you got to say, guys, the valuation is so silly. You got to go public. You got to, because you can raise all this money to power your business plan, and no one will actually give you that money in the private markets because your company's not even worth anything. Like that's why they did it, right? They raised, $700 million when, there's no way, I don't know. I'm sure they just looked at all their options and it was like, no, let's just go IPO.
Well, that's why they call it dumb money, the retail side, right? Like they're just not looking at the fundamentals. And it took you all of 2 minutes to research this company and say it's not a buy.
Yeah, but
it's not. Who's not doing that? Right?
It's not that simple though, because like these shares were sold. Like the 682 million that came in on IPO wasn't 100% Robinhood accounts from 22-year-olds. Like
no, but the secondary movement, right? Like the 5% up that you described today is all.
Sure.
It's got to be all retail driven.
It'd be interesting to see that data.
Yeah.
Yeah.
Yeah, we won't see it for probably 30 days out.
AI bubble. I mean, this has been in the news like every day now. Bezos is just in the news this morning saying,
yeah, he calls it an industrial bubble.
Real.
So we do have a newsletter out that is coming out, I guess, and we talk about that. And what do you do if you think we're in a bubble? And I'm asking you, I'm not being facetious.
You tell me.
I don't know. Do you sell out and wait till 2028 for the bubble to finally pop and you're like 3 years uninvested? I think that's just as bad as going whole hog. So there's two ends of the spectrum, right? You sell it all, or you double down thinking that it's going to be like this Dan Ives craziness of AI consumption, which, again, we talked about how much OpenAI brings in, $10 billion a year. They've already committed $60 billion to just Oracle's compute. They got other things they got to pay. So what's their burn rate? I would say maybe $100 billion a year against $10 billion in revenue. I know it's growing, but what subscription rate are they going to have to price to the point where businesses say no, too expensive, or And the lower bar would be what personal users who are paying $20 a month. That's nothing to them. But if it goes to 50, people are going to make decisions. And if you go to 50, what, you bring 10 billion revenue to 20 billion? Assuming you have no competition, right? Because people are using Claude and using Anthropic and Perplexity and other things. I think that's what Bezos is saying is this build out is probably going to benefit us down the line. Like, you remember the internet build out? It was just so crazy. But the profitable people were the ones that brought the digital world to the real world, right? The Amazon will deliver physical books to you via the internet, right? Or Google, we're going to replace the yellow pages and connect you with a plumber through Google. Amazon or Google didn't invent the internet. They leveraged it to make billions and billions, trillions of dollars actually. And I don't know if OpenAI is going to be profitable creating that highway system. It's going to be the UPS truck that uses that highway system to be the profit maker, whoever that is. I think that's what is intriguing about this AI trade. Is it's laying down the groundwork for something I think could be pretty special, right? Something very life-changing. But we probably won't see it for years. What do you think?
Yeah. I think the key to success here is going to be enterprise spend. Because OpenAI's revenue is 70% consumers paying, $20 a month for pro or premium or whatever. And I think the key is going to be unlocking enterprise spend in large contracts. And if they can figure that out and get actual applications, like I think the challenge, there's multiple challenges. One of the challenges is it can't say, I don't know. So like if you're using it as like a normal query, like it will just keep refining something like, hey, here's my document. Like, did I do, is this clear? It never is just like, yeah, it's great. Right? It always gives you some feedback. And then it just, anything else, and it'll just keep going. It's like the original images where you're like, draw me an image of a bridge. Now draw me an image of a bridge that's dancing. And like more, right? And it'll just keep going. It doesn't know when to stop. And I think that's how it kind of has to work. But I think that's the challenge is where does the human intervene? I also think that one of the challenges with AI is that when you go to the raw source, ChatGPT, Anthropic, these kinds of things, you really have to know how to use it. You can use it as a Google search, you can use agents, you can program things, right? But you really need to know what you're doing. And so I think that where really a lot of the value and potential profits lie is, let's say, using OpenAI as the engine to power your service, and your service is very specialized for, I don't know, weekly meal prep. So it's using the technology that OpenAI builds, but now it's applying it in a very simple box, search box or something. Because it's like too open, right? You have to be creative and know how to use it. Anyway, I guess that's my current stance. I think it.
Yeah, that leads me to you've been tracking Reddit's performance lately, the stock.
Let's check it out.
They've been selling off. Let me take a look at the 1 month. They're down 6% over the last month. That's because OpenAI made a shift from citing so much of Reddit posts in their queries. So that's an issue right there. Reddit isn't a place where it is peer reviewed, but maybe OpenAI has a way to generate resin from the crowds, but I could see where that could help, but I could also see where that could be a big issue. Because that's what I found was over-reliance on blogs and commentary. My biggest success with OpenAI, generating my own white papers, like 70 pages of academic research and things like that, and then drop it in there. Or investment prospectus versus, ground zero search, where you would think it would help you point in the right direction, but it doesn't quite do that. You have to be super refined and know what you're looking for.
Mm-hmm.
So I think what it will do is not make college students smarter. I think you could argue that they're coming out of high school and college probably a notch unprepared, because they're over reliant on AI. You saw that report in June, right? The drop of OpenAI usage was like 30%. Well, school was out. Students stopped using it.
I didn't see that.
And so one,
That's
it's
crazy.
not addictive enough or not vital enough to anyone's day-to-day life. So if you're out of college, you don't need to write paper, you're not using AI. Well, I don't, and again, there's only so many memes and pictures you can generate before you get wildly bored of it. So you got to look for deeper use cases, but I don't know if it's going to be widely adopted. And if you want to monetize it, you're going to start looking like Google, where every result is an ad-based SEO, right? Like someone's paid for that to get bubbled up to the top in your search. That's the only logical place I could see them making a ton of revenue without jacking up subscription prices to the roof, right?
Yes. And here's the bull case. And I made this case in a client meeting the other day when we were just talking about like exactly this, like this AI bubble thing, and like where does it go? It was just in the news that JetBlue, it was JetBlue, right? I was just trying to look that up to make sure I'm saying the right thing. I am fairly certain it was JetBlue, 4,000 jobs, right? You see that too?
Well, I was going to say is like route planning, all that stuff could be AI generated.
So I'm pretty sure it was JetBlue. JetBlue is cutting 4,000 jobs because they've seen improvements in AI, and so they don't need as many like call center type people. And I think the best news there in the bull case is that could potentially mean that all the roads here don't ultimately lead to Amazon, Microsoft, and the cloud, because you've got now actual applications of this stuff. And I mean, yes, it's cutting jobs, but ultimately, if AI doesn't increase revenue, can AI reduce expenses and therefore improve bottom line? And that would be a win for the S&P 490, which hasn't done nearly as much as the top 10 companies, the last number of years. So that's definitely the bull case for it. I think we'll just have to see how it continues to evolve.
Mine's kind of a roundabout bull case. Remember 2000, Amazon was like $1 a share because it was part of the dot-com bust, right?
Right.
But if you were crazy enough to hold on to Amazon, you more than made up for your losses, and then you're suddenly, all your decades worth of returns have been made up.
Speaking of Amazon, you got an Amazon package getting delivered. I can hear your greeting crew.
Yeah, let me address that really quick. Hold on.
You go do that. Now I should probably start the show, eh? All right, we are episode 76. Episode 76 is October 3rd, Friday, 9:55 in the morning Pacific time. And it is an up market today. It's green. We like those days. Those days are easier. Dow's up about 1%, Nasdaq's up 0.25%, and the S&P is up 0.5%. That's probably the best news of the day, is that the Nasdaq is lagging. Anytime we see, kind of the Dow and the S&P go higher than the Nasdaq, that's just kind of good for market balance. The other thing I would shout out is you've got the Russell 2000, which is the small cap index of the 2,000 smallest companies in the US. It's up 1.5%. It's leading the charge right now. That's good news. That's really good news. So outside of everything we just covered, we're going to talk a little bit about the Fed today, chat a little bit about just economic status, unemployment, stuff like that, and kind of a little bit more on the bubble stuff. Let's get into the real stuff. So how you want to kick us off with Fed? Quick update there.
Yeah, the Fed lowered rates. And
Fed raised rates. That's news to me.
Yeah, well,
you heard it here first.
There. They lowered rates, the overnight rate, but the rest of the rates beyond just one day went up. Go figure, right? So the market was listening in on the Fed and saw a pretty light forecast. So 2 more cuts the rest of this year, 1 in October, 1 in December, and just 1 in 2026. And then Fed Chair Powell sunsets, right? He's done in May, and it looks like the Trump administration is looking to essentially rebalance the board to get a majority. And Stephen Myron, who was the newest Fed appointee, because we had one resign earlier this year, he was the lone Fed voting member to vote for 2 cuts this round in September. And guess who he was nominated by? He actually still works in the White House, which is wildly irregular. So what they're going to try to do is they're not so shy about it. They're digging up dirt on current members of the Fed and trying to get them to leave early, right? Lisa Cook being that current example. But if Powell goes, they still don't have a majority. They're probably not going to have as aggressive cuts that they want. Last time we seen this where the president was so involved with the Fed was Nixon, and he had Arthur Burns push rates down from 6% down to 2%. And guess what happened? Inflation went up. Also, unemployment went up. So you had this cocktail of stagflation, that's what it's called, right? Higher prices, higher unemployment, to the point where Nixon resigned for other reasons other than the economy, but he had overseen a pretty crummy economy. And it took him another 6 years to get out of it. But rates in the 1980s went from trying to eyeball this thing. They went from 10% to 19% overnight because inflation wasn't going away. So again, this balance of Fed independence and rates versus what the president wants might be good in the moment, but it's very short-lived. I know things are different from the 70s, obviously, but we had oil shocks back then. An oil shock now probably wouldn't harm us because the U.S., producing a ton of oil, so the fluctuations in price probably will be tamped in terms of oil. But generally, when you try to manipulate the interest rates, you're not going to get the intended results. I think we've seen a couple of shots at this, and interest rates do nothing but go up, which is like counter to what the intent is. But I don't think this works out in the long term at all.
I'm looking at this chart here. I mean, the markets obviously did not like that period. So markets fell quite a bit during that period of higher unemployment. Fed funds rate jumped to 12% by
inflation's
August
13%.
By August of 1974. I mean, this is a lot. We have clients with these stories of, oh yeah, my first mortgage was at 14%, right?
Yeah, and that was a steal.
And that was a good deal, right? Exactly. So, I mean, just looking at if past is a predictor here, markets did not like that environment. And then the rest of the next decade was fighting all that, trying to correct it and get us back to some sense of normalcy, which we know we did enter a very, very, very long bull run, right? We went all the way to 2000 from that period, 30-year bull market, essentially. So
yeah, and that's because we also had deflation during that time. Or disinflation, right? Like we've actually had problems getting inflation up to the 2% target. And I think we'll run into that again, actually, but that just takes time.
I think it'll be interesting, whatever is in store now, just because of that data around how the economy is now powered by, quote, rich people. So people that make over $250,000 a year are now 50% of consumer spending. It used to be kind of the everybody across America was 70% of consumer spending. And so potentially as you see higher income people as a more important component of economic, I guess I'll say stability, and just stable spending, maybe we don't see as big of market swings because you don't see these huge pullbacks for, Target and Amazon, like people stop buying things. That's a theory.
More of a steady state. Yeah,
right, exactly.
That could be it.
Exactly.
I don't know if we're saying that's a good or bad thing, but that seems to be the top 10% tends to not spend 104% of their income.
Right. Yeah. I'm
yeah
merely just pointing out the facts and what potentially those facts could lead to, not trying to make a statement of good or bad, but I do think that it's plausible to say that makeup of spending yields a more stable economic environment. So time will tell. All right, government shutdown.
We got another one.
Here we go again. This just happens all the time. I mean, I don't remember this happening like when I was a kid. Maybe I just wasn't.
Yeah, it's kind of a recent phenomenon.
Kind of a recent phenomenon, right? And a recent, this is how we negotiate now. Just turn everything off and then see who can, see who's willing to wait the longest.
Yeah, and let's just leverage government workers and furlough them and use them as
Yeah,
leverage.
sure.
But
Look at all the money we're saving. So great. Close the national parks. No big deal.
yeah, as predicted, the market's up. Market could care less about shutdown. That's all the blurb I had is like 2 paragraphs of. They're generally short term, like lasting days. The longest shutdown was 35 days. So again, I don't know if anything breaks. I know libraries are shut down, but America doesn't even read. And if you've seen
What
me
are
on
we in,
video,
like day 3?
big proponent. Yeah, day 3. But again, federal parks, libraries, things that Americans are using less and less of. I don't know if they notice too big of a difference on their day to day. Essential workers of the government are still open, like post office and military. But I don't know. Maybe I'm just getting sick and tired of it and getting numb to it. But it just seems wildly unnecessary. Because really, it's to pass a budget. If you don't pass a budget, you can't pay your debts. So, if this drags on, we're probably going to look at another credit downgrade, but that would have to be pretty extreme.
I just want to come back to AI real quick. So, this is the Bezos article. So he was speaking at this Italian Tech Week. By the way, is he still in Italy? He's just like chilling out there after the wedding?
I don't know. He probably contributed like to 10% of their GDP though. From that
He's got a little
weekend.
facial hair now, so, still looking ripped. So that's good. All right, so he's saying, so this is kind of on the tails of OpenAI jumping to 500 billion. Former employees offloaded 6.6 billion worth of shares to outside investors. I bet private equity was clamoring to buy those shares.
Yeah.
Clamoring to buy those shares. Bezos's point here is the experiment around AI has led to investors to make investments that they might not otherwise jump into because it's like everything is getting funded. He says when people get very excited as they are today about artificial intelligence, every experiment gets funded. Every company gets funded. The good ideas and the bad ideas. Investors have a hard time in the middle of this excitement distinguishing between good ideas and bad ideas. So true. I mean, look at this IPO we just opened the call with. It didn't even talk about AI, but the promise of it being the power for AI, and it's worth 20 billion with no revenue.
I think it was George Soros who said, if you see a bubble, run towards it because you're gonna, I'm gonna try to make as much money as possible in the bubble, because I think the thinking there is bubbles last longer than what you might think. They don't just pop.
Yeah, for sure.
Right? And though we think valuations are stretched, it doesn't mean anything. The market could care less about valuations, to be clear. One day the piper will be paid, but what if it's 2030? You're sitting out in the market for 4.5 years. You're not doing yourself any favors.
Have you seen that chart of the NASDAQ now compared to the NASDAQ leading up to 2000, 2001?
Yeah.
It's the exact same chart.
Same pattern.
Same pattern, yeah.
Underneath it all, though, you have NVIDIA, who has objectively gotten cheaper as the price gotten up.
It has.
Because their profits are growing.
Yeah.
Well, big difference. The Mag 7 all make money.
And that's the thing. I was actually looking at this the other day. PE ratio of Microsoft, I believe it hit 70 in 2000, and it's nowhere near that today. And so you're talking about these companies make a silly amount of money, and so whatever we're in now is not the same as what we went through in 2000, 2001. The chart is eerily similar.
If anything, we'd probably say, hey, pump the brakes on adding significantly more to your portfolio with this stuff, but again, I don't think we're saying sell here.
I disagree. I think you have to stay in the index. You can't.
Stay weighted, right? But don't go whole hog and 1,000% of your portfolio in NVIDIA.
Oh, sure. Yeah. But be wary of deviating from the index, because then
you're gonna lag.
Yeah, you'll lag in both directions, and that's not great. Yeah, I just want to look this up. Price earnings. PE ratio here of Microsoft, because I think it touched 70. July 6th, 1998. That doesn't make any sense. It's above 80, but it's not showing. It looks like it's at 85. That doesn't make any sense. I don't know. This chart's not making any sense. Wait, down here it's 70? What? Hold on. This isn't working. 90. Thank you. 91. June 29th, 1998, Microsoft was trading at 91 times its PE. I mean, what does that say for some of these smaller companies? But the smaller companies aren't the ones that swing markets a ton. It's,
No.
it's the big ones.
Yeah.
Yeah, make no mistake. These companies make tons of money right now.
Yeah. Chris is right with the NASDAQ PE. It got to mind-bogglingly high ratios in 2020 or 2000, but I don't think we're getting that anymore. It's going to behave more like the S&P, which has a lot of old traditional companies that will never trade at those sky-high valuations. But if you just look at the money available to invest, that could be a reason why everything's more expensive, because people have more money to invest.
Yeah,
I don't
money
know.
markets, $7 trillion in money markets.
Why were we looking past the most simple explanation for all these valuations? Like, people are looking for something to invest in. Why not Nvidia? Because it is the most valuable company in the world, and all their products, pull in 40% margins? Name me a company that does that.
I think a lot of big tech does that. You just don't know because they spend a lot of money. Because if they didn't spend a lot of money, they would be investigated. Because the key to high profits is you're a monopoly. I mean, what's Nvidia? They have the only chip, right?
Yeah,
so
I'm not
you
going
can
to
only
Intel for Nvidia chips.
Right. You're not exactly. And so, how do you maintain 40% margins? You're the only game in town. And so, like, I think that's, companies like Google and Meta, if they wouldn't spend money. I mean, look, Zuck did it, right? He turned off all the spend and Meta became ridiculously profitable. And I think if you have Google that has, a handful of businesses that make tons of money and then a zillion businesses that lose money and they just funnel cash into them, if you shut this off, you'd be blown away at how much money these companies are making, I think. So
yeah, they would probably be doing stock buybacks or something. Like, we've seen it, right? Apple,
$1 trillion.
Yeah.
They've bought $1 trillion of their stock. Is that not the silliest thing in the world? $1 trillion. Yeah. That's a third of their stock.
I always thought that was short-sighted. Obviously, Apple stock has been on an absolute tear since 2008. Look at where they are in the AI race. Maybe it works out for them because they have not developed in-house anything that looks like the hyperscalers. Maybe that's purposeful, but we're not seeing a Meta Glass quality of product coming out recently.
I am shocked that Apple continues to command the premium that they do and that they're sitting right at their all-time high. They're $150 off their all-time high when there's been a couple articles like, oh, the newest iPhones are like a major leap. No, they're not. They're the same thing. Yeah, and they're like horribly behind in AI. The goggles are no match to the glasses. I mean, Apple typically like build a product and then evolve on it, right? Like version 1 is not what version 6 is, but
yeah. Where are we seeing an upgrade of the goggles?
It's shocking, and I don't even know. I haven't seen the numbers, but I don't think it's selling. So that's a problem, right?
And you're seeing cycle upgrades on the headphones, but again, there's pretty relatively small dollar purchase compared to the product lineup, right?
Yeah, but it's like 100% profit. So I mean, that's the brilliance of Apple is you've got their phone, which is, I believe, it's still the most valuable or profitable product ever invented, and then you have all these ancillary services that you tack on, which just add considerably to the bottom line. I mean, how much are these stupid headphones? $5. It's ridiculous.
I don't know. Chris and I are using wired headphones for video.
Yeah, from the old iPhone. These are the free ones. These are the free ones that came from the iPhone, 2 that I had. And now, you have these
that break every 2 years, right? You got to buy a new set.
Yeah, they've been fine. They've been fine. Apple's products are pretty good. I mean, if they had
I'll give you that. The durability has been
Yeah, if they had expensive products that legitimately broke every 2 years, I don't think you'd have a loyal fan base, but their products are pretty durable. Outside of every September, it seems like my phone gets slower. Strange. New iPhones are released, my phone stops working.
That's where I think the demand for the 17 is higher because everyone is holding on to the iPhone 13, which is essentially the same phone year in, year out from those last, 4 generations. It might be a throttling issue or a battery capacity issue where it's like, it's time to upgrade. It's been 4 years. Versus, remember every year people were like, I need to upgrade. That's just not Apple. That's Samsung. That's every other phone maker too, because we're plateauing in that technology, right? There's no big leaps and in advances. Maybe the foldable phones, but gosh, they're like what, $1,500 for the smaller version.
We'll see. We'll see when they come out, right? It's rumored that they're going to come out with a foldable phone, which would be cool. So, okay, we're on the 17. I usually go like 4 years on my phones. I'm just looking at mine now. So I have a 14. So I guess that means I've only gone 3 years, but it's like getting
It's
so
a sensible
slow.
upgrade cycle versus every year. I think every 3-4 years makes a lot more sense.
I'm not going to buy one every year.
Yeah.
I wonder how their leasing program's going. Anyway, this is not important. Economy.
Yeah.
You want to talk about the economy
Last
and then get
topic,
out of here?
yeah, it's housing. Yeah, less housing. As we said, I guess in the formal opening, I don't know when we started recording, but Fed cut rates went up, which I don't know. I don't know how you fix housing at this point other than build like crazy, but you're putting tariffs on copper and lumber. Last time I checked, you need a lot of lumber to build a house, and you need a little bit of copper to build a house. I don't know. So Redfin posted home sales data, probably the end of the summer. August ended at 462,000 homes sold, which is a 2% drop, 2.3% drop year over year. So home sales are not moving. And if interest rates are still 6.3%, we're probably not going to see any relief to housing affordability because one, sellers aren't even listing. And two, interest rates are making it so hard for the monthly mortgage payment. I don't know. I don't think housing is fixed with rates alone at this point. Like I'm just throwing in the towel with housing.
I mean, 3 statistics that are most crazy. Number of homes sold down 2.3% year over year. Median sale price up 1.5% year over year. Mortgage rates flat year over year.
Yeah, I don't know. First time home buyers aren't getting a break. And again, I don't know. I don't think they will get a break for a really long time, which is like probably what a lot of people don't want to hear. It's just mortgage rates are doing their own thing. And if we're seeing longer term rates actually go up, unless Trump comes in and actually starts buying via the Fed.
The potential solution, yeah.
The potential solution is just buy a bunch of the mortgage-backed bonds to artificially lower the rate. But then, as a seller, wouldn't you just raise the price of your house if you're selling? Because the demand is like all of a sudden, you know what I mean? That's why, yeah, I don't feel so great about the solutions, and I don't feel so great about where it is now. So if you're a first-time home buyer, I don't know what else to tell you. It doesn't look like it's going to improve at all. Yeah, rates are 6.34. It goes down to 5. I could see prices going back up, which is so counter to everything we've seen.
I think prices go up if it goes to 5. You got $7 trillion on the sidelines going, I can get 4% in a money market.
Exactly.
And that starts going to 2.5.
3, yeah.
3. And if we can see mortgage rates come down, and it's like, yeah, the next best thing is to buy a house. And you start getting back to that line of like rent is the same as a mortgage. Like when rates were 3%, it was like the barrier of entry to a house is the down payment. Figure it out, make it happen. And now obviously rents or mortgages are way more than rent. I think as you get closer and closer to that, people flip back into buying and you push prices up.
Yeah.
Hopefully, I mean, this is the thing, right? You're always going to have more and more demand for that. I don't know, 200 to, depending on where you live, $200,000 house to $1.2 million house, depending on, the city that you live in, right? You're always going to have more demand for that. So those will likely go up more than the $1 to $3 million house or the $5 to $20 million house, right? But I mean, I think we see that happen if we see rates come down. That's the key.
That's a big if.
Okay, in other news, Cracker Barrel is ending its relationship with Profit, the marketing firm that advised the company on its failed brand refresh. Okay, no surprise there. Thank you. You're fired. Great.
Yeah.
Okay.
Yeah, I think as a business, you can't really, I don't know, it seemed to me like a non-political move, that logo change, but I guess as a business, you can't do anything anymore. Because Netflix is under fire because they had a show, from 2 years ago that was canceled, that Elon doesn't like, and he's telling everyone to cancel Netflix. Disney with Jimmy Kimmel. Like, it's just nonstop of, I hate this company for this reason. And I don't know. Companies can't really walk on eggshells the whole time. And I can't believe I'm defending companies, but like it feels like every step is the wrong step. You know what I mean?
Right.
Like it's always a controversy. But that's it. I think that was all the topics. We went way out of order. Look for the newsletter to be in your inboxes pretty soon.
We'll do a separate newsletter, yeah. Yeah. All right, cool. Thanks everybody for tuning in, and we will catch you in 2 weeks.
All right.
See y'all.
Bye.